What is going on today? I'm going to show you the 5 tips that I have for trading that will make you more profitable or even make you profitable if you aren't yet. Starting off with tip number 1, we're going to focus on paying attention to supply and demand zones. This is more of the better way to look at it other than, support and resistance. Obviously with support and resistance, we have just kind of these lines, where price hit before. This is good. I'm not going to say it's not a bad thing, but the best thing to do instead of using that is to actually pay attention to supply and demand zones rather than specific support and resistance lines. The reason I tell you that this is a tip that will help you be profitable is because these are good areas, especially if you're using my strategy. These are good areas where you're going to want to look for reversals to happen. So what do I mean by that? I'll show you an example here. So the way I like to look at supply and demand zones is by just circling the kind of tops of trend, right? Just kind of circle these tops. And the same goes for when you're in a downtrend or an uptrend, you circle the bottoms. Since we're in a little bit of downtrend here, I'm going to pay attention to the tops. And what I like to do is I like to kind of mark out a zone. So what you're going to do is you pay attention to the top here and you just kind of mark the bottom. You find kind of the lowest point in this top and you just kind of pull it up to the top and pull it along. Now for me, this would indicate that this is kind of a supply and demand zone. Price likes to reverse out of these areas, right? So I'll do the same thing here. We kind of take this top, we kind of take the bottom, drag it to the top and pull it along. And as you can see, this part is targeted many times and we can do it over and over and over again. Take the top of this, kind of pull it up and it gets hit there. And then same thing here, you kind of take the top, you find the lowest kind of point, which would be here. You just kind of pull that along and drag it along. As you can see, price is now targeting into these areas. So that's something that's really useful. There's many videos out there on supply and demand. This is just something I like to use. So that's just going to quickly summarize this tip. I'm not going to go super in depth into it. However, I will say, like when I'm trading, these are kind of things I look to do. So for example, I just took this gold trade recently. I just kind of grabbed this bottom to the top and pulled it across, and that's kind of how I knew price was going to reverse out of here. So yes, that is something I like to pay attention to. So tip number 2 that I'm going to be talking about today is going to be using the MACD. Using the MACD more. I talk about the MACD so much on this channel, and there's a reason I do so. I do so because I love the MACD and I think it's one of the best indicators out there. You're not going to trade it as an indicator to buy and sell, but you're going to use it rather to help you identify highs and lows. Because sometimes out there can be some false highs, some false lows, and you just want to make sure you're trading the real highs and the real lows. So as an example, if I were to take away the MACD for a second, just have the raw charts here. Specifically my strategy, I wait for price to break, above the highs and lows to indicate reversals. So if I was doing that without the MACD, I could get mixed up a lot because I would think maybe this is a high or a low here. I think, okay, price has come, okay, I think price has come above that, so I'm ready to take a buy, and then I get stopped out. But if you add the MACD, as you can see here, you actually pay attention. This high right here doesn't actually correlate with anything, because as you can see, if you drag all the way down and go to the MACD here, it's red, and a red means low. It doesn't mean high. It should be green here if it's a high. So obviously this isn't a true high, so the true high would actually be here. As you can see, the true high never got broken. And if you bring it down here, this never got broken, and then this never got broken either. So that's how you pay attention to true highs and lows. You get some good trades out of that. Now I know a few of you might be asking, how do you know what's a high and what's a low for sure? When I'm specifically using the MACD, I'll actually show you the MACD settings I have here just in case you're interested. You can pause the video on this. It's all just mainly default stuff. So what I make sure to actually pay attention, if there's just one single dot that's green, that doesn't mean it's a high. For me, in my own kind of trading plan and rules, a high specifically for me has to have at least 3 bars on the MACD. And also the green, let's say you're looking for a high and it makes this green pulse. The green pulse has to then make a red pulse for this to officially become a high. And then I just mark the highest part. So say from this left side of the green MACD to this right side of the green MACD here. In between this, I pick the highest point of the wick and that is the official high for me. So if this gets broken, then I know that price should most likely start to reverse to the upside, and that's how I take these trades. All right, just quickly before we move on to the next tip that I have for you, if you're interested in getting a new broker, or if you don't have a broker and you're looking for a broker, I highly recommend trading with Hango Trade. They have really good spreads, really good leverage. I personally use them to trade, and you can get your account set up pretty fast and funded with crypto. So if you're interested with signing up with Hango Trade, I have a link down below if you want to sign up with them. All right, so moving on to the third tip I have for you. The third tip I have for you is something you might not have heard a lot of people talk about, but it's something that I've been practicing and applying in my own trading, and that is actually using lower risk to rewards. And I know right away you're probably wondering why. Like, why would you use a lower risk to reward? That is, maybe my strategy uses higher risk to rewards. Well, my strategy that I trade, actually I used to use high risk to rewards with, and I would actually get a lot of these higher risk to reward trades. But something I learned over time was having these high risk to reward trades, I would have a lower win rate. But not only have a lower win rate, the thing that was also harder about it was I would also have bigger losing streaks. And to quickly explain that, I'm just going to put an example here. So, if we put a trade, this is a 1-to-1, right? The stop loss is the same amount as the take profit. Without even looking at any strategy, without even looking at the charts, statistically, if I were to just randomly place this 1-to-1 trade randomly anywhere on the chart, statistically, this trade should work out, at least half the time. Doesn't mean it has to half the time, but because it's a 1-to-1, usually there's about a 50% chance that the trade will win, and there's a 50% at the chance that the trade will lose. Now, that's getting rid of all the edge of the market, all your strategies. That's just random. If we were to randomly place at any point in the chart without actually having the strategy, there's usually about a 50-50 chance either way. So that means that every time you take a trade, if you're just taking 1-to-1s only, you're not going to have a huge losing streak. You're not going to lose 10 times in a row. It's very rare that you'll lose 10 times in a row. And when you're trading, losing 10 times in a row can be very unmotivating. It can make you kind of switch up your mentality, and it can break you a little bit mentally. So if you're taking these, like, let's say 1-to-10s every single time, if I were to make this into a 1-to-10, statistically, if you were to place this anywhere on the chart, probability says that there's only about a 10% win rate to this. So that means that you could literally lose 10 times in a row or even more before you actually win a trade, which can be very demotivating for people who are trying to stick to just a nice strategy that's not going to have these huge losing streaks. And that might kind of break your psychology a little bit when you're trading. It might unmotivate you. It might start to make you think that the strategy isn't working, things like that. So I've been sticking to lower risk rewards, and I'm not talking super low, just more in that kind of 1-to-3, 1-to-4 range. I used to try to always aim for like 8s or above. But now that I've kind of lowered that in half, I tend to get less losing streaks, a little bit more motivating, and it just keeps my mind in check whenever I'm trading. It's not really too necessary to have super high risk rewards anyway, so it works out. My next tip is really simple, just really quickly I want to cover. That's going to be trading quality over quantity. Same kind of thing that we just talked about. This is a little bit different. We're trying to be aiming for more quality trades over quantity trades. So, that means not taking trades even though you might have a good setup, but maybe there's something that you're kind of worried about not taking that trade. Focusing on taking less trades, maybe 1 trade per day kind of thing, and focusing on a trade that might feel more profitable to you or more higher probability to you than just taking 100 trades a day and just constantly trading. It can also kind of burn you out a little bit throughout the day, which you want to stay sharp when you're trading. So try to stick to quality trades over quantity of trades. Now, the final tip that I have for you that I wanted to tell you today, which has kind of helped me a lot in my trading, and this is mostly where the profitability comes from, and that is what I like to call a double trade, or you could call it inception trading. And what I mean by that is, let's just move to another pair here. We'll just go to the next pair. So what I mean by that is, whatever your kind of strategy is for trading, you take that strategy and you double it onto a lower time frame. So I'll visually show you here. It's probably easier. So let's say your strategy was, trading when price hits a trend line. So instead of trading right away when price hits, the top of the trend line, what you will do is jump to a lower time frame and trade that exact same strategy that you have. So, it would have hit this trend line up here, but instead we're going to wait. We're going to wait for a new trend to form, and we're going to trade off of this trend line. So you could take a trade here or here. And the reason I'm saying this is because it helps you to have double confirmation of not only one time frame, but a second time frame as well, which is really important. And I'll show you how it can help you out. So let's say you're back on the 4-hour here, and let's say we didn't even know any of this was going to happen. All right, let's say we're just back here, and let's say we're a trend line trader, and we want to say that, we'll say when price forms a trend line, we'll try to kind of trade it off the trend line here. So we'll just kind of pull this down, and we'll just say to ourselves, okay, cool, if price, because you want to make sure there's at least 3 connections. So let's say we thought this was the trend line here, and we'll say, when price comes up here, we'll take a sell, right? So then fast forward, price is coming up. Nice, we want to take a sell here. Okay, we take a sell. But as you can see, if you were to trade on the trend line specifically, right, you would have got stopped out. So what you do is then you jump to the lower time frame, like the 1 hour, for example, and you do the exact same thing. You kind of make out your trend line, and you're going to trade off of this trend line instead. But then what you do is you jump to the 4-hour time frame, and you set your stop loss and you take profit accordingly to whatever strategy you want. Let's say you want to target this low right here. And then not only have you hit the trend line on this higher time frame here, kind of hit this, but then you waited for another trend line to hit on a smaller time frame, like the 1 hour. So now you have this double confirmation kind of thing going on, which can, in turn increase your win rates a lot higher. And as you can see, it just goes straight down to you take profit. So whatever your strategy is, try to double it on a smaller time frame. Try to trade that exact same thing. So then you have 2 confirmations. So it's kind of like it's playing out in order from higher time frame to lower. And if you could do a triple trade too, that works even better. So you could do like a daily trade and then jump to the 4-hour and then the 1 hour. Have the same trade play out on every time frame, and you'll get a very optimal entry. It also makes it so you can have smaller stop losses because you're getting more of a targeted entry. But yeah, other than that, hopefully you enjoyed the video. Hopefully you learned a little bit in this video, and thanks for watching.